Today's topics: planning for retirement's uncertainties. Lots of good ideas, questions from our viewers. So sit back, let's get on to another Straight Talk. Hello, this is Michael Loftus with Wealth and Wisdom TV, where education is the key to a successful financial future. Welcome back to our next episode in our new video podcast series. I've gathered all these questions from clients and our thousands of viewers on our YouTube channel, and we're trying to bring some good value and answer some questions. So if you like what you hear, please do consider subscribing. So first up, quote, "The view from space is like having a globe in your desk. It's a broadening experience," from Buzz Aldrin. I feel that way sometimes. All this data I get sitting at my desk and having to apply to our everyday work. So today's topic: planning for retirement's uncertainties, okay? So a lot of things come up. Obviously, never a straight road, right? Life in general tends to take different turns, so we have to be prepared for that. So as I mentioned in the intro, we've had a couple questions from some of our viewers. Thanks for sending these in. All right, and let's get into that. So first up, interest rate changes. Hello, going through that one right now, aren't we? Well, here we are. We've been in a low interest rate environment for so long. We really became spoiled, right? Because we had low interest on mortgages, on cars. Now, of course, you had low interest rates on money markets and savings accounts as well. But here we are now. The Fed is clearly starting to raise. It looks like the target's about 4.5%, which historically is still very low, but really a shock to the system. So, at this point, as I record this late October, we're still in the early stages, so let's see how this shakes out. Eventually, I feel that the Fed is going to do what they normally do, which is pivot, start going the other direction. So I think we've got some short-term pain, okay, which is to be expected after 14 years of a bull market and very low interest rates. All right, next up is life expectancy and longevity. So obviously we're dealing with that. That's a good thing. Modern medicine is amazing. So we have to plan for that, right? And that's where making sure that you have a plan in place, a financial plan, okay? Now, a financial plan in its simplest form: money in, money out. I'll put a link here to a video I did on that with some more details. Money in, money out, and then let's go out with all the different things, right? Monthly expenses, healthcare expenses, vacations, weddings, colleges, whatever the case might be. It's a big puzzle, right? I, like most advisors, well, I would hope all advisors, have very good software. We can plug all this in, put all these different scenarios into the box, and come up with that plan and look into the future and see how things look. Now, I always say it is a living, breathing document, so it needs to be updated on a regular basis. Next up, how to deal with year-to-year stock returns. Well, let's go back to my financial plan. One of the things that I do, which some people may not like, when you hear the Jim Cramers of the world saying the market's averaged 7 to 10% a year. No, it hasn't. I mean, if it has, it'd be 120,000, okay? I've done a video on that as well, but the bottom line is when I do a financial plan, the number I plug in is just a flat 4%, all right? That just gives me a baseline, and if you go back to 2000, that's about where we are. Did go up, of course, we're in a downturn, but about 4% is the standard over a long period of time. Now, not saying you're going to get that every year. Of course not. That is not our objective, but 2021, great year, above average returns across the board, even for our conservative investors. And now we're in 2022 in October, and we're in you could call it a downtrend, you could call it a bear market, beginning of a recession. and clients are seeing losses. So you take those couple years together, and now you see why I put in those type of numbers for a return. So look, at the end of the day, on my last video, I talked about risk tolerance. Take advantage when we're in an uptrend and protect in a downtrend, and I think that's probably the best thing to do. Future healthcare needs, same goes in with a financial plan, right? There's so many things that can come up. Talked about this also in the last video. Life insurance, long-term care. There's what's called hybrid products. They give you both life, long-term care. So you can draw down on long-term care for long-term care options against that death benefit. If you don't use it, it gets passed on as a tax-free death benefit. Now, on top of that, having some type of liquidity if something comes up. Now, hopefully, we should all have some type of health care in play, Medicare if you're over 65, and all the various options. So hopefully you won't have big out-of-pocket expenses. So next one is inflation. We are living in that in a big way. Now, we are really in almost an anemic, if not a zero inflation environment for so long. A lot of that, again, being driven by low rates. And so now we're at really historic highs or close to it. So, and it came on quick. Now, we were prepared from an investment management standpoint. Not going to get into that here, but the bottom line is, again, as of October, right, we're still high. Now, we do see over time inflation going down. We expect disinflation, which means a slow rate of change going lower. The Fed says they're going to get to their 2% target by the end of next year. I doubt it. I think it's going to be very difficult. You might see a 4 to 5 number, right? I mean, it's going to take some time. That could change if we go into a deep recession. But I do feel that over time we will see it come down. Hopefully, the Fed, you've got the government printing a lot of money. It really got us in this position. Also, supply chain issues. And we hope to see that clear up as time goes forward. So, thanks so much. Some really good topics today. Appreciate you sending those in. You can put them on our YouTube channel here or wherever you're watching this video or listening. Send us a message. We'll get it added. So next up, we've got our mailbag. All right, we've got Jim in Ohio. All right, so I want to save more for my retirement. I've maxed out my 401k. What should I do first? So great job, Jim. That is always what you should do first. Max that 401k first, because it's going to reduce your tax base, right? Your taxable income. So next you've got obviously, well, not obviously, but 2 options, okay? The first one is a Roth. Now, that depends on your individual tax bracket. We've done videos on that. Should have those numbers. If not, I'll have a link below. Do you qualify? Can you put money into a Roth? That option's the best because it goes in. Now, it does go in with after-tax money, but will grow tax-free. So really like that option. Option number 2 is putting into a non-retirement, maybe a brokerage account, where you can, again, put money in there and invest. So the key is to do it. Now, there are some tax ramifications, potential tax ramifications when it comes to a non-retirement account. You could have capital gains. If you buy, you sell at a profit, right? Again, gains, dividends. Make sure you remember that. That should be part of your plan and some tax planning, one of the things that we do. So you want to make sure you think about that as well. So Roth or a non-retirement account. Next up, we have Leslie, South Carolina. Thanks so much. Appreciate the question. So been working with a financial advisor. My brother thinks he can do a better job. Should I go with him or stick with my advisor? Well, as an advisor, what do you think I'm going to say? Look, at the end of the day, I think that it depends on your brother, right? What is his experience? Is he a day trader? What's his process? What does he have going on? As an advisor, again, I'm going to go in this camp. There's a lot of different things we do: the financial planning, tax planning, estate planning, legacy planning, and also the money management side of things. So we bring an array of options to our clients. okay? And on the investment money management side, which is part of your question here, okay, we definitively have a very detailed process, okay? Latest video here in the market updates, and you can learn about that, but that's what we do. We do it every day. I mean, I get up every day, start about 6:45 and go till 9:30 going through data, listen to a macro show, plan out, view, look to the forward, look forward, etc. So again, maybe your brother does a great job. If he does, hey, give him a shot. But if he doesn't do a good job, he's still your brother, okay? So keep that in mind. Thanks so much for watching. Michael Loftus, Wealth and Wisdom TV. Hopefully, we'll see you again, or you can also catch us on our podcast platforms as well. Take care. See you soon.